In Australia, the superannuation system's actually now a significantly large system. We're the fourth largest superannuation savings pool in the world. And alongside that, you've seen the growth in funds and the growth in the sophistication of those funds. We get a lot of talk about the various asset classes outside of equities and bonds that large super funds are investing in. And so alternative asset classes, which we use to sort of capture all of these assets, are increasingly becoming part of the conversation that advisors are having with clients and how to get exposure to these asset classes. It's not the easiest asset class to access as a retail or wholesale investor. Perpetual Private recognised the importance of alternatives quite a while ago, so in the mid-2000s, and when we looked out in the market in terms of trying to access these asset classes, we really didn't find many good options. And so to that end, we actually created our own programs, and over 15 years later, we've now got over $1 billion in alternatives. And these asset classes are actually proven quite rewarding for clients. In essence, what they do is they provide more diversification and then therefore more sort of stability in terms of that return. And that's actually what we're trying to do as financial advisors. We plan for clients to achieve a certain return. And if we can provide more certainty around achieving that return, that's really why we're adding these types of assets to portfolios.
On the one hand, it's like public markets where you really have to analyse a fund manager, you need to understand them, you need to spend time doing the right due diligence. What is their team like, their business, their process, and all those usual things. But what's a little bit different about alternatives is that you also have to understand the structures. There are aspects like legal and tax and different terms to the structures where it's harder to analyse and you need that specialty and that expertise. And we've got that at Perpetual Private because our team have been doing it for a long time. Well, what's really great about our alternatives program is that we offer the clients this unique opportunity to access two very diversified alternative funds. They're a one-stop shop of the best global opportunities across what is a very broad alternative space. Portfolio construction is really important because once you know the pool of great opportunities, it's about packaging them up and it's about managing the right mix of risks, returns. Liquidity is so important as well as hedging. All these important aspects that we do on your behalf as a client.
The Income Opportunities Fund is an alternative or a complement to a regular fixed income portfolio. It's designed to provide a higher yield over time, and it's designed for clients who just can wait a bit longer for their money to get back. The bulk of the assets are invested in direct lending, US, Australian and European. We also have structured product, which includes commercial mortgage-backed securities and CLOs, and more recently, direct property. We're designing it to provide income over most time periods. So even during volatile periods, we want to see a relatively high yield, at least relative to normal fixed income markets. In more recent times, we've achieved that, and we've achieved that over some very volatile periods, including the European crisis. The fund tends to be more illiquid and higher forecast risk than traditional fixed income. We try and get around that by diversifying across vintage year, asset class, and manager. The fund's designed to be a complement to fixed interest, so a client who has a longer time horizon can accept a higher yield by investing in this fund over fixed interest.
The Perpetual Growth Opportunities Fund is designed to provide clients with a diversified exposure to growth alternatives. We invest across infrastructure, real estate, absolute return strategies and private equity. Going under another layer within the portfolio, for example, within our infrastructure portfolio, we have exposure to a number of the domestic airports in Australia. In our real estate portfolio, we have investments in a number of very large and well-known commercial office buildings in Australia's largest CBDs. And in the private equity part of the portfolio, we are seeking to deliver exposure via companies that will deliver strong growth through time. Within the Growth Opportunities Fund, we're trying to deliver an uncorrelated source of return relative to traditional equities. And therefore, by investing in the portfolio, clients should expect to receive a diversification benefit relative to the equities and fixed income exposures. The Growth Opportunities Fund does invest heavily in some illiquid assets like infrastructure, real estate and private equity, and therefore we do recommend that clients have a longer investment horizon when investing in this product. We suggest 5 years or more, and liquidity can be scarcer than investing in things like traditional share markets.
Now, alternative assets can provide some great benefits to portfolios, but it's not without risks, and you do need to be aware of the unique and different risks that alternatives can represent to investors. Perpetual's opportunities funds provide you the reassurance that you're investing in a professionally managed portfolio of alternative assets, and one that has been built to ensure that retail and wholesale investors can access this asset class with certainty around what they're getting and the benefit it's providing to their portfolios.